All right, well, let's get some global opinion. Fook Hien Yap is Senior Investment Strategist at Stancy. Fook, great to have you with us here. Good morning. Thanks for your time. So, just a quick word, Fook, on the flows picture, and if there's anything you're picking up from clients that you speak to and how they are positioned. Because, we were just putting out the data. Locals, both on the cash side and future side, are positioned in a long way. And you've got this constant barrage of selling from foreigners. Now, the debate is, what is that selling coming on account of? Some are saying, well, they're not selling because of the elections, because they've been sellers in February, in March, and April. So it's not an election-related thing. It's a bunch of other things. Your first thoughts, just feedback when you speak with clients.
Yeah, I think in the month of April, when we saw a bit of weakness in the US, we saw some flows coming out of the US towards Asia and out of Japan as well, which has done very well, and into China, actually, where it's been a very beaten up market for a long time. And then we saw a bit more policy announcements, at least from the very top level of policymakers. We saw a bit more bargain hunting going into China. A lot of watching about what's going to be the policy changes in terms of support for the property and housing market. And then the earnings as well, in terms of, we saw a lot of earnings in the Chinese internet space this week. So we've been seeing some flows coming out of that. And we do see that China tactically, at least for the next few months, has some legs. It has been a very oversold market. We saw some of the buyback news has been positive. But over a 6 to 12 months view, I think our preference actually still remains with markets like the US, where the earnings season has been phenomenal. And I think that's going to be supportive. But in the short term, we've been seeing some more flows of bargain hunting going into China.
Fook, hi, good morning. I was looking at a note that you folks put out, and it was titled "A Triple Top in Rates." So I just want to understand how this is playing out, because we were just discussing the numbers. Foreign investment coming into the Indian capital market, it's actually gone. All the money is moving to the money markets. It's going to Indian bonds. And the money is simply not coming to Indian equities. So any reasoning that you can ascribe to this?
Well, I mean, I got to say, firstly, that we do like Indian bonds, especially the, if you're 10 years above 7%. And we've got a view that the rupee can be relatively stable, going to about strengthening a little bit into 82. We think actually the local, in terms of the space of emerging market, local currency bonds, India is favored, right? 7% is above the other peers and FX is stable. So we do like that. Now, in terms of the equities, we think that currently it is an opportunity in terms of we've seen the market consolidating a little bit, going sideways, but we do like India equities. We think that the post-election, the narrative of a stronger growth, continuity, that's going to come back. So it's a bit of a consolidation phase now, but we do like Indian equities. We think it is an opportunity. But right now, I think tactically, we've been seeing very strong momentum in China, and some of the flows you are seeing is directed. Questions we see are directed in that direction.
Hi, Fook. Good morning and good to see you, Ben. Fook, a two-part question is what I had for you. One is on the Fed action. Earlier we were talking about a March cut, then June, it's pushed down to September, which now the street is factoring in as a certainty. Do you think that actually comes in? And the second part is, the FI flows, well, they haven't been there getting into the election. But I was looking at historical data, and the FIs actually, they don't buy ahead of the India election. They come in a little bit later. So post getting a positive verdict, do you think then we'll see the big FI inflows?
Yeah, I mean, on the Fed action, our view is that we're going to get 2 rate cuts this year. One in Q3 and one in Q4. And I think a lot of the issues has been about the yields and inflation. We saw 3 positive surprise for inflation, and then the last print that we saw has been a negative. So the inflation has been a bit weaker than expected, which is good news for the market. And so I think we saw the S&P 500 making new highs, and we do expect that it can continue to outperform, as we do expect inflation to come down and the narrative or rate cuts will come through. Now, I mean, the sensitivity of the market pricing, of course, is to the data that comes in. And we still need to see, we've got employment data coming in, and then we need to see inflation prints as well. And we're still in an environment where bad news is good news, in the sense that when you see a weaker economy, that will prompt the Fed to cut rates. and then that's going to be positive for the equities. So yeah, I mean, we do expect 2 rate cuts this year, and that's going to be supportive, especially for the valuations for the US. But it's really the earnings where we've seen 2024 and 2025 both upgraded post Q1 earnings season, and that's a positive for that. Now, in terms of the view in Asia, I think we do like India equities, as I said. I think it's consolidating a little bit at the moment, but the narrative is there. I think a lot of people do view it as a core allocation, as it's going to be growing very strongly in the medium term. So the election is news that we're following, but then we think post-election there would be more coming in.
Okay, all right, Fook, we will leave it on that note for today. Thank you very much for joining in and giving us some perspective on the Indian market. Well, on that note, we do have to take a very quick break. We'll come back on the other side with our list of top stocks to watch out this Friday morning.